then the market is just going to flail around. You're not going to get any kind of follow through. You have to remember that when the market is at these levels, the British pound is at these levels, we are at essentially 30-year highs. 30-year highs. So if the market is going to go above that and it's going to continue up, doesn't it make sense that people have to have a good reason for pushing the market up? Remember, the markets don't just go up for the sake of going up. They go up because individuals have the opinion that there are going to be higher prices down the road. Okay? Or in the case of currencies, that interest rates are going to stay high relative to the other currency. In other words, that the British pound is going to pay more in percentage terms than the US dollar. Now, this could mean that the US dollar is going to actively lower rates faster than the British pound, or the UK is going to lower their interest rates. So the US might lower, 0.5, and the British lower 0.25, and then the US lowers another 0.5, and the British 2.25. Okay, so they're still lowering, but it's slower. Or it could mean that the US is going to lower 0.5 and the British pound is just going to stay even. They're not going to move it at all. It could also mean that the US is going to lower 0.5 and the British are going to raise it plus 2.5. Okay, each of those scenarios would equate to the British pound US dollar going up. So until that picture becomes clear, don't expect the market to make nice, big, long trends like it did here, like it did here. That's all I got. Like it did here and here. Okay, even this area there and there, those were nice moves. Also this one. Now we're entering into a period where the traders are basically saying, okay, well, the pound is back up here to 205. But does it really deserve to go up to 206 or 207, 208, 209, 210? If it doesn't, then you can bet your bottom dollar it's going to stay this way for a while, or they're just going to eventually break it to the downside. So having said all that, there's still not a whole lot to do, folks. There really isn't a pattern up here. The market, in fact, has broken outside of this trading lane. As you can see, it's gone to the upside, and it came up a little bit. So there's a gap here, a gap there. Not really the best opportunity to trade. Remember, this is about trading high probability setups. It's not about getting in there and trying to force feed the market into doing something that it's just not going to want to do. Overall, yes, the market is just eking its way to the upside, but there's still very few opportunities for trades in here. At this point, what I would look for is short trades in this area. 3-bar reversal is a good trade setup up here. You're going to have to watch it. It's not something you're going to be able to set up ahead of time, or waiting for the market to form the 3-bar reversal and then the little dipper back up, which would be the market trading up, mucking around, pushing down, and then coming back up to this 205 area, looking to go short for it to come back down. Alternatively, down in this area, you can see definitely building a support zone. So once it gets down here, 3-bar reversal, or again, a little dipper pattern, it's where the market moves down, mucks around for a while, pushes up, comes back down before finally moving its way back up.